Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it Fear Explodes because that's exactly what happened on Thursday and Friday. And we'll talk about that. Everybody knows they've been reading about the bank, SVB, that went under, and now the concern of how do they control that, etc. But let's just focus on the price action and focus on what happened in the market. We're going to start off by looking at the side-by-side here, the Dow Industrials, the S&P 500, the NASDAQ 100. Look at the industrials versus the transports. And I'm going to focus on the Russell 2000 ETF, IWM, today. Take a look at the weekly daily and the Elliott Wave picture on it. Look at three of our indicators, key indicators, and then I want to look at two key ETFs, XLE and XLF. All right, so let's start off here with the weekly view of the Dow Industrial. The industrials were down 1482 in here at the close. So we finally broke through the December low. You know, we'd come down in the prior week. We kind of, during intra week, we broke through it and then didn't close down below it. Now we've got a pretty substantial close below that December low. I think it's a good sign of weakness in here on the Dow Industrials. The S&P 500. The other thing, look at these candles that we've got. They are bearish engulfing on all three of these. Clearly, this last week that just ended, we opened up to start the week, couldn't go anywhere, and then just sold off. And not only did we close, like on the S&P 500, below the body of the prior candle, we closed below the entire range, trading range of the prior candle in here. S&P was down 184 points. The NASDAQ 100 down 460 points. Same kind of thing, okay? Not only trading below the body of the candle, below the entire range, and closed below the entire range in here. So pretty negative picture. Let's take a look at the Dow Industrials versus the Dow Transports. Now the transports have come back down hard. You know, I was starting to wonder about them for a while because look what they were doing in here. Was this the first week of February, really? It's the week beginning Sunday, January 29th. And if I go over, where is that right here? Well, that's right, somewhere in here, right here. So see, the Dow didn't confirm this push, okay? But the Dow had already pushed really strong back over in here in October, November. So starting to wonder what were we getting, but it was looking like a classic zigzag corrective type pattern. And now we've come back down hard off of that week. And it looks to me like we're getting ready to break that trend line, and I expect it to resume the bear move in here in the transports starting next week or continuing next week. This is a pretty good start at it right here. Okay, let's take a look at the Russell 2000. Okay, the Russell 2000 was down 5.3. I'm looking, where's my notes? Down 5.3 on Friday. Let me go. Okay, I'm going into the intraday, and I don't want to do that just yet. Let me go here and show the weekly daily. So here's the 5.3. Look how we gapped down in here. And then we were down 15.32 for the week. So I think the biggest thing when you look at this daily is this is a channel created by the zigzag pattern of an ABC in here. And let's look at the Elliott Wave picture. So here's what we're talking about, this ABC. And yes, I do have this labeled as intermediate wave 2 with this high, okay? And so now we're pushing down. What are we looking for? We're looking for the first 5 waves to make up the first minor wave 1. So within intermediate wave 3, let me go back over here real quick. Within intermediate wave 3, we're going to get 5 minor waves down, just like we had over here in intermediate wave 1. We had 5 minor waves, except when you have an impulse pattern, they can't overlap. A wave 3 has to be an impulse pattern. It cannot be an ending diagonal or a leading diagonal or anything like that. It's going to be a pure impulse wave structure, and it should be stronger than intermediate wave 1. So this is a pretty good start to it. So what am I doing with the numbers that I've got in here? Let me get rid of the crosshairs for a minute. And let me get my marker out. So 180.04, that is where this wave would equal wave B. Well, we've now exceeded that. So in my mind, that was the first sign that this move was becoming stronger than anything we had going on in terms of corrective. The second thing, we broke the trend line. So now the third thing I'm watching for is a break of the low of wave B in here, which is 170.34. I don't think we're that far away from it. We closed 176.18. We're really, what is that? Less than 6 points away from the close. The low was actually 174.26, about 4 points off of that level. So right now, this looks like it's in hard down price action. It has gotten very extended. When I use a 10-bar RSI in here, 10-bar, 10-day, depending on the time frame you're using, and it's gotten pretty extreme with this move. And this is a 130-minute view. So when I look at the wave structure, I'm just not sure the third wave, and I'm talking about the third wave within this third minute wave. This third minuet level, I'm just not sure it's quite done yet, but we are very extended. So that's the caution I've got on it. And just like everything else, I mean, you're going to get the wave structure is the same form. It's just at a different level of degree, okay? So we're still working our way down. That doesn't mean we're not going to have bounces along the way. Okay, so that is the Russell 2000 in terms of the picture that we've got. And yeah, I think we've got more to go to the downside in here. Okay, let's look at a couple of my indicators. We're going to look at 3 of them actually. And the first one I want to look at is the percent of stocks above their 50-day moving average in the S&P 500. I'm going to go back to the moving average view, and I'm going to pull this out a little bit. We're just looking at the daily, and here is that picture. So we're sitting at 16.93% of the stocks are above their 50-day moving average. So interesting thing about this, and I've been showing this for a long time, showing my members this. This did not confirm the push that we got in January, February to a new high, or a higher high, not a new high, a higher high. We didn't confirm that push in here. And yeah, we're getting down in that territory where, we bottomed down here in June, but that was quite a ways below. That was down below the 10% level. Same thing in September, October, the 10% level. Well, we're getting down there, but I think we got a few more days ahead of us. And that is the S&P 500. And here's the picture on the New York Stock Exchange. Same kind of thing. We're basically in free fall right now. On the New York Stock Exchange, 23.7% of the listings, stocks, whatever, are above their 50-day moving average. That's it. So that picture has deteriorated very rapidly. All right, the next thing I want to take a look at is the VIX. And of course, this is what everybody calls the fear indicator. You can see how this exploded, okay, on Thursday and Friday. Thursday, after the market closed, and in the video I put out to members, I drew this line and said, hey, this thing blows through this. We're going to get an explosion in here. It just looks like it's set up to do that, and we got that on Friday. Now, the high was quite a bit higher than where we closed. High was 28.97. Let me get my crosshairs back so you can see where we are up here. Now, if we zoom back out a little bit and take a look, it seems like the highs, at least looking at through last year, the highs, intraday high got pretty high in January. What is it, 38.9? So almost 39 points. I mean, you'd have to sit back and say, well, you get above 34 into that range, that's where, things may peter out. Well, it's going to be interesting to see what happens here in a intermediate wave 3 move to the downside. That's supposed to be stronger than intermediate wave 1. Well, we'll see. But, we'll definitely be watching the price action as we get up into this territory. And right now we're sitting at 24.8 on the VIX. Let's take a quick look at the number of issues hitting 52-week lows, new 52-week lows. And this is on the New York Stock Exchange. So I was watching this. This is what happened back in August into September, October. And look at the explosion that happened. I thought we were getting the same thing in December, but it just petered out on us, okay? Now, all of a sudden, with this, Thursday, Friday move, 215 more stocks hit 52-week lows here on the New York Stock Exchange, exceeding the level that happened in December. So again, watching to see what kind of follow through do we get in the push in here to the downside. Now that's the New York. How does the NASDAQ look? Similar type of activity, but stronger. 550 stocks hit 52-week lows in here, new 52-week lows, and exceeded December, just slightly exceeded the December level. So exploded pretty quickly, but that's the same kind of thing that happened back over here September going into October. Okay, so that's where we sit with those indicators. Let's take a look at XLE, the Energy ETF. Okay, this is a daily view of XLE, and the thing that really jumped out at me about this was it first caught my eye about this support level right in here, which I've got at 82.65, okay? So it's come down into this area several times, and then on Friday it closed 82.63 is where it closed. Now, this looks like a little head and shoulders type pattern, except it's not the top. And then I thought, okay, well, could you call it a head and shoulders type consolidation? Well, not really, because you haven't been in any kind of a trend. So the more I looked at it, I said, well, what it's really doing is it looks like a double top. So when you have a double top, so like right here, here's the double top, right? And here's what it looks like, okay? The double top is confirmed to be in when you get a close below the midpoint. Now we got it on Friday, just ever so slightly, okay? The low right here, I went back and looked at these intraday lows. The low is what I labeled it at, which is, if I could get it to cooperate in here. Oh, come on. I can look at it in another window. 82.65. So we've got it at 82.65 and we closed at 82.63. So we'll see if that's enough. This really kind of is in sync with what I'm expecting when I look at oil and I track USL, and I look at USL every day. So when I look at that, I mean, I'm looking for that to pull back further and even more than what it has. So it's been chopping sideways, and now I'm looking for it to head south. We'll see if we get it. But right now, this looks like it's getting ready to head south. Let's take a look at XLF after all that turmoil with the banks this last couple of days. Okay, here's the picture with XLF. Let me see if I can get the daily. I didn't write it down. It was down 61 cents on Friday, down $3.06 for the week. So you could see pretty dramatic week that they had in here. Now, I know this is not a specific bank index. It's not, the KBW, whatever it is. I don't remember exactly what it is, index. But I thought, okay, this is a pretty broad financial index, and it's still getting some pretty significant weakness that's showing up. Now, when I go to the Elliott Wave picture in here, let me go to the weekly view first, because that's kind of interesting when you look at this. Look at the longer term picture of XLF coming off that 2008 financial crisis low, the February-March 2009. This really looks like there was the big classic 5-wave move in here, okay? Yeah, there was a 5-wave move right here, and then this move is an expanded flat right here, and then we got the strong 5-wave move up here, and now we're heading south. Now it's interesting, coming off this top, we are looking just like the S&P 500. Now, I want, a couple of things I want to point out. Let me go to the daily view. Let me move this back. So remember what I just talked about on the Russell 2000? I said, well, it's kind of interesting that, I'm looking for confirmation that the zigzag is over with. Here's the ABC counter trend move. Whenever you have a counter trend move, we're talking about 3-wave move, right? Okay, so right now, this move right here has become bigger than the B wave. So that's the first check mark. Second one, well, the first one actually was a break of this trend line. Okay, so there's 2. And then now what did we do? We took out the B level. So this looks pretty negative in terms of the picture, and it looks to me like we are definitely heading south. I'm expecting this to develop into a 5-wave, intermediate wave 3, just like what we are looking for on the S&P. Okay, and in the Russell 2000 and on the Dow Industrials, et cetera, et cetera. So this is the picture. Let me see if I've got. I don't think I've got a whole lot of detail more in here, but you can tell and see where we're at. Okay, so that's my thoughts on XLF, XLE, the Russell 2000, and a few of the indicators. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. Easy for me to say. And if you'd like more of that information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great week. We'll talk to you on the next video.